Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady and principal owner of Everett Tax Solutions, where we help you win the tax game. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the home business community. All right, so today we are talking about KYC, which stands for Know Your Customer. So, Know Your Customer really became a big deal in 2017 when the IRS won its case against Coinbase. That was the when the IRS won the ability to send a summons to Coinbase to get their customer information. So KYC is the process of knowing who you are. It is verifying your identity. And so you have to do this when you go to banks and such. You have to be able to prove who you are, right? And so now this also applies to cryptocurrency exchanges. And really the point of it all is to know who you're dealing with and to really help curtail criminal activity like the money laundering, funding terrorism, tax evasion. So if the crypto exchange does not abide by the KYC rules, they can be held liable. So one of the things that came from the Coinbase John Doe summons was there were people who were prosecuted for tax evasion that were selling drugs using cryptocurrency. There was a lady in New Jersey, I do believe it's in New Jersey, that was funding terrorism using Bitcoin. So all of these things were out there, and that was the initial reason for the summons, other than the tax dollars. Okay, so yeah, it was the tax dollars, but it was also to catch criminals. So that is the point of the KYC, is to help curtail illegal activities on cryptocurrency exchanges. And so are there still places where you can buy cryptocurrency without the KYC? Yes. But here's how it works. So typically on a cryptocurrency exchange, you're going to put in your email address. They're going to ask you for your social security number, your date of birth, your physical address. They're going to ask for a copy of your ID. And some exchanges even have you take a picture with your webcam so they can compare your face to your ID and to make sure that that you are who you say you are to the best of their ability. Okay. So but your ID is going to have to be, either a driver's license, a state issued ID, or your passport, right? So once you provide that information and they can verify your identity, then you have access to using the exchange. Now, as I was saying, are there places that you can go and buy crypto without the KYC? Yes, there are, peer-to-peer marketplaces. There are, what's called AMMs, automated market makers. I had to make sure I said that right. So it's basically almost like just like a Craigslist or a Blackboard for cryptocurrency. But here's the thing. On these types of platforms, you have to already have cryptocurrency to trade. You're not going to be able to, deposit money from your bank and then, buy cryptocurrency like you do on the exchange. On exchanges, you upload your cash, your fiat currency to that exchange, and then you purchase cryptocurrency. On these peer-to-peer marketplaces, you already have to have the cryptocurrency already in order to function. And so there are different with these different types of marketplaces, the peer-to-peer and the AMMs, they set their own prices. So there's contracts, there's liquidity pools, there's all different types of ways for you to trade your cryptocurrency. And so even though they don't have physical identification like your driver's license and such, you have to already have a crypto wallet in order to function on those exchanges. And when you have a crypto wallet, you have you have public and private keys. And in order for you to access your cryptocurrency wallet, you got to have both. Okay. But the thing about the peer-to-peer marketplaces, there's a lot less protection on those on those marketplaces than there is on the exchanges, because you're dealing peer to peer. There's no third party intermediary that is there to protect you. And again, there's no FDIC insurance when it comes down to cryptocurrency. So you really have to know who you're dealing with, because if you lose your cryptocurrency, if it's stolen, it's gone. Right. We just had the hack of, I forgot the name of the company that messed up gas in the southeast area for a couple of days. And the people that hacked them demanded payment in cryptocurrency, but the government was able to go back and trace that because it was such a huge imposition to the United States, right? But on a regular day, that's not how it's going to work. There isn't going to be a government agency that is going to go and find somebody unless there's something with some widespread fraud, okay? So another way to get cryptocurrency without having to go through the whole KYC is through Bitcoin ATMs. There are actual Bitcoin ATMs. The first one popped up, I want to say, in San Diego, but they're starting to pop up more and more. But they can also cost more in transaction fees. So, and the main thing I will tell you is this, is the security, because once you can't lose the keys to your wallet. Okay. And so understanding that a crypto wallet is not like a wallet that you put in your pocket. It can be paper, it can be like a little thumb drive or something, but it's the information that you need to be able to access your cryptocurrency. And if you lose that, it's gone. All right. But back to the KYC part. So, so the draw to cryptocurrency to begin with was that level of anonymity, right? And there is a certain level of anonymity still, but that doesn't mean you're anonymous from the government. And that's what the summons for Coinbase, Kraken, and also on Circle, that's what that's about, where the government is like, hey, we got this part of the information, you got the other part, you need to give it to us. And so that's how those John Doe summonses work, and that's why the KYC is so important. So it's not that the government is, I mean, I get it, because you're like, why are they all up in our business? But the initial point of it all was to was for criminal reasons, to track down criminals. But like I said in the beginning, that's where they start, not where they stay. And so now, all of the people that are committing tax evasion by not claiming these gains on their cryptocurrency, that's what's next. That's what's happening with the enforcement. And with the KYC part, it makes it a little bit easier to track you down. Okay. So hope that helps you out. Thank you guys so much for tuning in, and we will see you all next time. Bye.